Good evening, everybody. It is Sunday, January the 9th, and it is about 7:30 here in Toronto. I'm your wealth guy. Let's talk money. Let's talk Sunday market preview for the week. So what do I expect for this week? Well, I expect a lot of volatility. And for two main reasons. Number one is inflation that we can expect to be reported, and it's going to be significantly higher than we're used to. I know the Fed's target was 2%. Last month was at 7%, I think. We're probably going to see it somewhere in that range between 6 and 8% again this month, which is a frightening number just in general for everybody's pocketbooks. And the truth of the matter is we also have the FOMC minutes that are coming out, and in the minutes we're probably going to hear a lot about inflation and interest in particular. I don't think we're going to hear, and even if we do hear a lot about tapering, we're really not going to see any tapering whatsoever. In fact, the Fed has a notorious history of not acting on what they say. So even though they say they might taper, the truth of the matter is they're not going to taper at all. But they will increase interest rates. People call it a hike. I'm definitely not going to use that word because it's going to be anything but a hike. It's going to be a very small, insignificant increase in interest rates. And I mean insignificant in terms of how it can impact inflation. We're probably going to see something along the lines of 0.25%. Now, that to me, actually, no, not just to me. If we take a look at the U.S. dollar, the U.S. dollar's reaction is a true indication of what commodity traders or currency traders in particular think about the Fed and what they anticipate the Fed to do. And the truth of the matter is, ever since the Fed started coming out talking about tapering, talking about increasing rates sooner than later, or at least examining that, currency has not increased or decreased in value whatsoever beyond the normal daily fluctuations. Like, let's get that straight. We have had almost zero impact as a result of the FOMC or the Fed talking about interest rates and tapering. To me, that's a clear indication that currency traders quite literally don't give a shit about what the Fed has to say because they know it's not going to do anything. And in fact, like I mentioned, if we see a 0.25 point increase, we are literally going to have zero impact to inflation. In order to have anything meaningful, rates have to absolutely skyrocket, which would never happen because that would absolutely annihilate the entire system altogether. But that being said, volatility will be in the market as far as equities are concerned. Now, I do expect additional increase in volatility on the tech side. And that could be either way, to the upside or to the downside. At this point, we've seen tech take quite a bit of a beating, even significantly higher than the US 30 or the Dow. And tech will continue to sit under pressure. However, this might be approaching near the bottom of that tech situation. And I anticipate that we may see an opportunity to perhaps start to taste a little bit of the tech sector again. But that being said, I do anticipate significant, again, volatility in the market, but I also anticipate a lot of risk coming into the market as well, meaning a risk in terms of a correction. So I am going to say that even though the risk overall is relatively moderate, low end of that moderate level, I do anticipate that the volatility may help create fear in the market and therefore may have people creating or trading irrationally during the next couple of weeks. Crypto markets. Now, crypto markets are also going to see some extreme volatility. And even though over the last 24 hours or so, we've seen a little bit of a rebound in cryptocurrency, the truth of the matter is this. We don't really have anything there that's going to propel cryptocurrencies upwards. And with everything going on around the world economically and politically, especially if you take a look at Kazakhstan, which has absolutely massive turnovers and protests which have overturned governments and overturned the military. Kazakhstan, for many of you that don't know, is a open haven or a welcoming spot or a welcoming haven for crypto miners, especially after the Chinese have gone ahead and started restricting that. And so with all this volatility in Kazakhstan and political turmoil, they have cut off the internet at some points in Kazakhstan, which has impacted the miner business quite significantly, which has helped keep cryptocurrencies pretty well suppressed partially. That's all part of the reason. But it is still a very significant reason. Now, if we take a look at cryptocurrencies overall, as I mentioned, increasing volatility is going to continue to be in the marketplace this week. And a big reason for that, again, is because of the FOMC and because of inflation. And depending on what the FOMC says, that might cause investors to leave traditional equities and move into cryptos. And it wouldn't surprise me if that were the case, because often we find that fear is a motivator one way or the other. Fear or overconfidence one way or the other will impact the markets. And if we take a look at precious metals, the same level of volatility will be there as well. I'd love to see gold continue to sit over 1800, although it has tipped back and forth over the last week or so. Silver has to get back up over $23. That's my critical number there. But overall, don't forget, it is earnings. So added volatility there alone, but that'll be more isolated to the individual stocks that are being reported or that are doing their reporting. But that's it, everybody. Volatility for the week. Happy trading. I will see you next Sunday at my market preview.